Fundrise and REITs both promise passive real estate income, but there's a gap between promise and reality that most reviews gloss over. As someone who's invested in both methods, I've discovered one option that gives you control and access that the other simply can't match. If you're deciding where to put your money, what I'm about to show you could prevent a major investing mistake. Let's expose what investors aren't being warned about in this Fundrise versus REIT comparison. So, let's get straight to the heart of this Fundrise versus REIT debate. This isn't just about picking a specific investment, right? It's about choosing your entire approach to real estate. And honestly, these different options appeal to two completely different types of investors. Think of Fundrise not just as an investment, but as a full-service platform. It's built for the modern investor who wants the benefits of private real estate, the kind that's not tied to the daily drama of the stock market, but without being a landlord or a Wall Street expert. You get a piece of the action with a much lower minimum investment compared to buying property yourself. The platform handles everything for you. It finds the deals, manages the properties, it collects rent, and it distributes dividends. It's designed for investors who want a completely hands-off, long-term growth partner with all the information and tools hosted in one clean dashboard. Now, a REIT is different. So an REIT is not a platform, it's a legal structure. It's a company that owns or finances income-producing real estate. You can buy shares of a REIT on the stock market, just like you'd buy Apple or Tesla stock. But the key difference is control and correlation. With a publicly traded REIT, you're buying a stock. Its price jumps up and down with market sentiment, the interest rate news, and economic fears. It's often disconnected from the actual value of its properties, just like most stocks are disconnected from the value of their companies. So you're basically just along for the ride. With Fundrise, you are directly invested in the underlying properties. It just tells you the exact value and it gives you the exact rent payments, right? It's not like driven by the panic or euphoria of the stock market, making things go up and down. It's a way to de-risk your portfolio from Wall Street's mood swings to put them into direct assets. So if you're like me and you want real estate to be a stable, growing anchor in your portfolio, something that doesn't give you a heart attack every time the market has a bad day, then Fundrise is designed for you. It's for the investor who values steady growth, diversification away from the stock market, and who prefers a guided, set it and forget it approach, right? But for any of this, don't just take my word for it. So when I looked at the reviews and the discussions from other Fundrise investors to get more of the full picture, I saw a common theme, which was appreciation for the simplicity and the firewall it creates from market volatility. Here's one reviewer who pointed out that Fundrise's diversified portfolio offers compelling exposure to alternative investments typically reserved for institutional investors. He emphasized that the platform's interface is remarkably intuitive, making complex asset classes accessible. He said that this democratization of access with low minimums is what makes Fundrise distinct. This wasn't just a comment about stock prices or whatever. It was about gaining access to a previously closed-off asset class that most people couldn't invest in. When I researched community sentiment, I found a revealing discussion on Reddit. Someone asked, "Is Fundrise even worth it?" and expressed some skepticism about returns. Another user, who had experience with multiple alternative investments, replied directly. He affirmed that he uses Fundrise for diversification away from the concentrated S&P 500 and stock market. He explained that private real estate and the VC fund are a way to help counterbalance that against just having all of your money in the stock market. He then compared using it to other platforms, stating plainly that Fundrise has definitely been the most reliable alternative for him. Alright, now that we see the core philosophical differences, let's get practical. What do you actually get when you sign up? The first thing you'll notice with the Fundrise platform is how it simplifies the complex journey of real estate investing. It's not just a place to put money, it's a system designed to grow it strategically. One of the most powerful starting points is the investment plan. When you sign up, Fundrise doesn't just throw you into a pool of random properties. You get to choose a plan that matches your goal: supplemental income, balanced investing, or long-term growth or venture capital. Each plan then automatically allocates your money across different funds, some focused on stable income, more so others on growth-oriented development projects or a variety of other real estate projects. But what if you want more control? What if you want to get even deeper into the details? Well, that is where Fundrise Pro comes in. This membership level is a game changer. It lets you break free from the standard plans and build a custom plan. You can look at all of their funds: the income eREIT, the growth eREIT, the development eFund, even their venture capital fund, and choose exactly which ones you want to invest in and set your own allocation percentages. And when you have that custom plan, you then get to choose your custom plan allocation method, dynamic or flat. Dynamic is smart. It looks at your current holdings and automatically guides your future investments to keep your portfolio aligned with your target. If one fund becomes overweighted, it'll put more new money into the others to rebalance. Flat allocation simply invests every new dollar exactly according to your chosen percentages. This level of tactical control is something that you simply don't get with a standard REIT investment, with the down to the percentage amount or the dynamic being just automatically changing it for the future. So once you choose which one you want, once your plan is set, making investments is really effortless. You can start with auto invest, so you can basically set up weekly, bi-weekly, or monthly contributions starting as low as $10. Your money automatically goes into your chosen plan, dollar cost averaging you into some real estate that'll grow your investment portfolio. So this is how you build a meaningful position over time without having to think about timing in the market. Because with direct real estate, timing the market isn't really the point. Consistent investing it's a long-term investment for sure. All right, now let's talk about returns. How do you actually make money? Well, Fundrise explains it clearly. Returns come from two places. First, dividends. These are your share of the rental income and profits from the properties. They're typically paid quarterly, and you can choose to have them sent to your bank account or automatically reinvested to buy more shares. Second, appreciation. This is the increase in the net asset value of the shares that you hold, reflecting the growing value of the underlying property portfolio. Your account dashboard shows both components clearly so you can understand exactly where your growth is coming from. For retirement savers, a huge feature is the ability to open an IRA directly on the platform. You can open a Roth or traditional IRA and invest your retirement funds into private real estate, enjoying those potential tax advantages right up front. Tax time is another area where Fundrise streamlines things really smoothly. So you'll get your necessary tax documents right in your account, typically Form 1099 DIV for dividends from the eREITs. And if you invest in the eFund, the Schedule K1, you can also get a different form for that, and there's different forms for all these different things. It's basically all organized and really clear for your taxes. So as someone who actually really hates tax season paperwork, I really appreciate the simplicity that you could just get everything in one place. And here's a truly unique feature that you're not going to find with any REIT, and that's the Fundrise IPO itself. IPO just stands for Internet Public Offering. So this is an opportunity to invest directly in Fundrise's parent company, Rise Companies Corp. So they're the company that allows you to invest either in the real estate or in the company itself. It's not just the actual real estate that you're investing in. So that's a fascinating option for investors who believe in the company's long-term vision. But of course, both Fundrise and REITs are not going to be perfect for everyone, so to make the best choice in your Fundrise versus REIT decision, you need to know the potential downsides of each. With Fundrise, the most common critique I've seen is that the investment options aren't always easy to understand immediately. One reviewer pointed out that it kind of takes some time to get in your head around how everything works and what you're actually invested in. So yeah, it's true that there is a learning curve and you have to do some research before you put your money in where you want to put it. It's not just a simple savings account, right? But Fundrise provides a ton of educational content, blog posts, videos, webinars. It all helps you bring you up to speed. Honestly, that initial complexity is the price of entry for a more sophisticated direct investment. But REITs, on the other hand, have limited growth potential because REITs are required to pay out 90% of income as dividends specifically. So they have less capital left over to reinvest into buying new properties or upgrading existing ones. So it's a different strategy inside of REITs. So this can cap their long-term appreciation potential compared to a structure that can reinvest profits. When it comes to cost, Fundrise operates with a clear fee structure that's outlined on their website. It's priced as a premium, hands-on platform because that's what it is. For the absolute latest on their fee schedules, current promotions, or any trial offers, make sure to check the link in the description below. I'll try to keep that updated so you always get the best deal. And REITs obviously have different rates for each REIT. They're all in the stock market, so you can check them individually. But after putting both strategies to the test, where does this Fundrise versus REIT strategy comparison leave us? What's been exposed, right? Well, if your goal is to add a layer of genuine, non-correlated stability to your portfolio, then Fundrise emerges as the uniquely powerful choice, especially dealing with real estate here. A REIT, particularly a publicly traded one, it's still a solid tool for income-focused investors who prioritize liquidity and who don't mind navigating market volatility or researching them and comparing them, but that's, again, up to you. If you want to get started and check out each of them, make sure to click those links in the description below.